Welcome back to Investing Talk Podcast. Today, we are analyzing Centrus Energy.
Mm-hmm.
We're tackling that critical question.
Mm-hmm.
Is this stock a good time to buy now? I mean, this company seems to be sitting right at a fascinating crossroads, doesn't it? But national energy policy, military stuff, major tech milestones all rolled into one.
Yeah, absolutely. And our mission today really is to give you that complete picture. We're going to synthesize the latest financials, look closely at the technicals guiding its, well, let's face it, pretty volatile price action. And crucially, we need to understand how these massive government contracts and even global partnerships are shaping Centrus Energy's future. It's about looking beyond just the quarterly numbers, understanding the bigger geopolitical picture too.
Absolutely. And before we really jump into the weeds here, just a reminder, if you find this analysis helpful, please do subscribe, like the video, and leave a comment below. Also, if there's a specific company you want us to analyze next, just drop that name in the comments. We do read them.
Okay, so let's start with the fundamentals, but maybe even before the numbers, we need to talk strategy. Centrus Energy holds this really unique strategic position in the U.S. nuclear scene. What really defines this stock, I think, is that it's currently the only U.S. company enriching uranium using purely U.S. origin technology and U.S. supply chains.
Wow. Okay. So it's not just another energy supplier then. It's basically a national security asset. But what does that actually mean for their products and, the money they make?
Well, it means their technology is, for now at least, pretty much irreplaceable domestically. And when we talk enrichment, we're really talking about two key products. There's low-enriched uranium, LEU, that fuels today's standard reactors. But the really big deal, the one everyone's watching, is high-assay, low-enriched uranium, LEU.
Okay, ALEU. Let's maybe unpack that acronym a bit.
Yeah.
Why is ALEU the game changer here?
Right. HEAU is critical because it's enriched much higher, up to 20% compared to standard LEU. And crucially, it's the required fuel for this next generation of smaller advanced nuclear reactors. The ones the Department of Energy and a lot of private innovators are pushing hard for. So if the U.S. wants to modernize its nuclear fleet, well, Centrus currently holds the keys to the fuel supply. That's why their revenue is frankly exploding.
And you can see that strategic advantage translating directly into some pretty powerful financial momentum. Looking at Q1 2025, the results were kind of astonishing, weren't they? Revenue shot up 67% year over year. That huge jump really confirms they're successfully cashing in on this HAU and LEU position. It feels like they've shifted from being about development risk to now being about, well, execution risk.
And the bottom line shows that transition even more starkly. Centrus reported, $27.2 million in net income for Q1 2025. That's a massive turnaround from a loss of $6.1 million just a year before. So this wasn't some slow recovery. It was fast and decisive.
Yeah, and a lot of that growth came from the LEU segment, didn't it? Gross profit there just jumped dramatically from like $500,000 the previous year to over $31 million. And that seems powered by rising prices globally. They got a double whammy. A 46% price surge and a 49% increase in the volume of separative work units, or SWUs, sold. That really signals soaring demand meeting tight supply, doesn't it?
Exactly. And on top of that, the balance sheet looks much healthier now, which is frankly crucial for a strategic asset like this. As of March 34, 2025, they were sitting on a huge pile of cash, $653 million. And importantly, they used that cash and their improved financial footing to retire those higher interest 8.25% notes early. That move gave them a lot more flexibility and actually netted them an $11.8 million gain in the quarter. So they're deleveraging pretty quickly.
Okay, but this kind of leads to the big question for investors, right? Is this explosive growth really sustainable quarter after quarter? I mean, this business leans heavily on these big multi-year contracts, especially with the government and utilities. Q1 was great. Q2 2025 was also strong, nearly $29 million in net income. But can we count on that flow being, smooth?
Oh, absolutely not. That volatility is just baked into the business model. You really can't assume that kind of massive quarterly outperformance will continue evenly. The revenue hits when they meet specific delivery milestones in those contracts. It's very event-driven, which means the stock price tends to react fiercely to specific announcements, not just broad trends.
Right, and that volatility is exactly why we need to turn to the price chart now. As of September 2025, the stock's been bouncing around between $34 and $46 over the last month or so. And the fact it's currently sitting closer to that upper end, around $46, tells us buyers have definitely been reacting to the good earnings news and those big funding headlines we've seen.
Yeah, and when you connect that chart action to the fundamentals we just discussed, you see these clear reaction points. Support seems to be holding up pretty well near that $33 to $35 level. That suggests the market kind of sees that as the floor, the minimum acceptable value after the turnaround. On the upside, though, investors need to watch those resistance levels clustered around $45 to $48. For the stock to really break out into a new bullish phase, it needs to decisively clear and hold above that $48 mark.
Okay, and given that volatility you mentioned, how should we read the momentum indicators? We've got the 50-day moving average rising near $38, but the 200-day is way down at $31. What's that gap telling us about the risk here?
Well, that widening gap between the 50-day and 200-day is a classic sign of a strengthening medium-term uptrend, confirming the bullish move that started earlier this year. However, because the stock is so event-driven, like we said, those averages act more like potential floors and ceilings that get tested really quickly after big news. The RSI, it's sitting near 62. That signals positive momentum, sure, but it is getting close to overbought territory. With this particular stock, that often means you should probably expect some short-term pullbacks after a big announcement cycle finishes up. It's a momentum play, definitely, but it's not a steady climber.
That leads us perfectly into the next section then, where the longer-term story really comes into focus, the contracts and the catalysts. This is where that national security asset label really starts to pay dividends, right?
Precisely. Centrus Energy's contract backlog is, well, it's staggering. It currently stands at $3.6 billion. And that backlog isn't just some theoretical number. It represents years of future revenue visibility, largely locked in by the U.S. government's commitment to nuclear fuel independence. Just recently, the Department of Energy, the DOE, exercised a really crucial option on that LEU contract. It's worth around $110 million and secures production right through June 2026.
And they're actually delivering, too. Centrus recently completed a delivery of 900 kilograms of HALEU to the DOE. That's a major tangible milestone. It proves they can actually execute on this highly complex tech. Plus, we can't forget that huge policy tailwind. The $3.4 billion Congress recently approved specifically for domestic nuclear fuel production. That money seems aimed squarely at companies like Centrus.
And the story isn't just domestic either. This is really about building a reliable global supply chain that's separate from, Russian influence. Just this September, Centrus signed a memorandum of understanding with some key players in Korea. We're talking Korea Hydro and Nuclear Power and POSCO International. The goal there is to explore potentially investing together to expand the enrichment plant in Piketon, Ohio. That kind of international backing, well, it suggests the world sees Centrus as a key piece of the future nuclear energy puzzle.
Okay, so for investors looking at maybe the next 3 months or so, what are the immediate triggers or dates they should circle on their calendars? What could really move this stock?
Right. There are two hard gates to watch. First, November 5th, 2025, that's the Q3 earnings report. Given the lumpy nature we talked about, this report will be super critical for judging cash flow continuity. Then, December 3rd, 2025, there's a scheduled DOE contract progress announcement. That could be significant. Beyond those dates, you have more speculative catalysts, things driven by its unique position. Stuff like maybe accelerated DOE funding releases, whispers about potential large new utility contracts. And, there are always those background rumors of strategic takeover interests simply because they hold such critical technology.
Okay, we've definitely covered the huge potential here, but now we need to look at the other side, the concerns. If Centrus is such a key strategic asset with improving financials, why does the source material only give it, 6.5 out of 10 rating? What are the big risks?
Yeah, the risks are definitely significant. They mostly center around execution and, predictability. Let's go back to that contract reliance. That $3.6 billion backlog is great for security, sure, but it also guarantees inherently volatile results. Investors who are used to nice, smooth quarter-over-quarter growth from, say, a software company, they might get spooked when Centrus hits those inevitable dips between contract milestones. The market can penalize that lumpiness.
And tied into that is execution risk, right? We already saw an example where their technical solutions segment profit dipped because of delays in a DOE contract expansion. If those kinds of delays happen again, or maybe on a bigger scale, like with the HALEU facility build-out, that could seriously pressure earnings, even if the long-term revenue is still secure on paper.
Exactly. Then there's the slightly awkward issue of insider sentiment. When you look at the filings, you're not really seeing large-scale insider buying, which is often what you'd hope to see if management felt a massive surge was imminent. Instead, you see some planned insider sales, like those 11,000-odd shares disclosed back in August. Now, that can just be standard diversification for executives, but in a high-growth, event-driven story like this, a lack of big buys or seeing actual selling can signal a certain cautiousness internally. Investors probably shouldn't ignore that.
Okay, and what about competition? Does that national security status completely shield them?
Not entirely, especially not in the long run. Look, if U.S. policy keeps aggressively subsidizing domestic enrichment and Congress is throwing billions at it, it's definitely possible that new players could eventually emerge. They could start to challenge Centrus's dominance, maybe chip away at their pricing power over time. And of course, the global price of uranium and SWs themselves is always going to be a wild card.
Right, so pulling it all together, the overall rating ends up at 6.5 out of 10. The strengths are pretty clear. That unique strategic position, a really strong cash balance now, and that huge policy tailwind. It's a definite American energy infrastructure play.
But the risks, the lumpy results, the execution delays, maybe that slightly lukewarm insider sentiment, they keep it from being a slam dunk buy for everyone. The conclusion seems pretty specific. Short-term trading could be attractive, playing the volatility around news events. But for long-term investing, it really seems suitable only for those investors with a higher risk tolerance, people who fundamentally buy into the U.S., sticking with nuclear independence and backing HAOU tech for the long haul.
Yeah, Centrus Energy is definitely positioned right at that intersection of national security and the energy transition. It's got the strong financials now, that incredible backlog. But the stock price itself feels inherently tied to unpredictable government actions and whether they can actually deliver on time.
It's a really compelling puzzle, isn't it, where policy pretty much dictates profit potential.
Exactly. And that complexity brings us to our final thought for you, the listener, to maybe mull over. Considering how deeply sensitive the global nuclear fuel market is to geopolitics, especially with current global tensions, how quickly could things like export restrictions, new tariffs, or just shifting international alliances suddenly override all the positive domestic policy? How much could that impact Centrus Energy's long-term stability and its pricing power? What happens if that Korean expansion plan gets tangled up in geopolitical friction?
That's a great point. That potential interference from outside forces, well, that's arguably the single biggest unpriced risk in this stock today.
Something to think about. We'll catch you next time on Investing Talk Podcast.